Welcome to the Journal. The news this week drove us to pull The Great Gatsby off the bookshelf and read what F. Scott Fitzgerald wrote of his protagonists, the Buchanans. They were careless people, Tom and Daisy. They smashed up things and creatures and then retreated back into their money or their vast carelessness or whatever it was that kept them together and let other people clean up the mess they had made. It's happening all over again, except this time Tom and Daisy are the titans and speculators on Wall Street who took the money and ran. Their bubble burst, as it did in the roaring 20s, leaving the mess for you and me, our children, and our grandchildren to clean up. The big bad government, so despised in Wall Street boardrooms and Beltway think tanks, has stepped in, hoping to save capitalism from the capitalists, with possibly the biggest bailout in U.S. history. A summit of top officials last night was reportedly told the country is just days away from a complete financial meltdown.
We must now take further decisive action to fundamentally and comprehensively address the root cause of our financial system stresses.
The news caught everyone off guard, including my colleagues and me. For technical reasons, we had to record this broadcast last night, with guests who have a deep understanding of the big picture. We decided to go on with the broadcast, even as the news continued to pile up, because of the light our guests shed on the roots of the crisis. Gretchen Morgenson writes the Market Watch column for the Sunday New York Times. Floyd Norris is the paper's chief financial correspondent. Welcome to the Journal.
Thank you.
You both have been at this a long time. Is this the biggest story like this that you've both covered in your long careers?
I think this is the biggest story in 80 years. This could be the biggest story since the Depression. And I know I'm not allowed to say the D word because that makes everybody really afraid. But this is the single, most traumatic financial crisis I've ever seen.
How so? Why? What's at stake?
Because it affects everyone. It is now possibly bleeding into the economy. We've had a fairly strong economy up until now, which has been a godsend while this incredible turmoil was taking place. If banks are stopping lending, which they appear to be doing, then that's going to affect the economy to make a downturn. So it is affecting everyone. There was a lack of accountability where a banker didn't care whether the loan was repaid. And the Wall Street firm that sold the securitization trust didn't care if it ever got paid back because they were happy with their commission. The broker making the loan didn't care because he got it. All the way up the ladder to the CEOs of these companies who are allowed to walk away from a financial cataclysm with the huge payments.
Should they be required to return the loot?
Yes. Why not? Claw that back. But does anybody ask for that? No.
You were here a year and a half ago, remember that? But did you have clues then that this whole thing was going to come unraveled?
The problem is that this is a deleveraging. What we're going through now is we have to eliminate all the debt that has been amassed by not only the consumers with their credit cards, their mortgages, etc., their car loans, but also major corporations and Wall Street firms who were leveraging themselves, borrowing money to make their speculative bets, and now those bets have gone bad, and they have to pay those debts back. You see, the assets shrink, but the debt doesn't. And so you have to pay that debt back, and that's a difficult thing to do. But we still, the AIG bailout proves that we don't know how bad things are at these firms. The idea that AIG could fail over a weekend, and where the government can't go through its books in an orderly fashion to see what it's worth, but just has to throw money at it to make the problem go away, tells you we're not anywhere near there.
Well, AIG, Lehman, they kept assuring investors everything was all right, assuring the public everything was all right. Were they lying?
Oh, I'm sure they believed it.
You really think
I believe Lehman believed it. Lehman consistently during this has believed that the bottom was upon us. So they were buying as this started down last year, taking advantage of what they believed to be a temporary, ridiculous decline. And they never quite realized that they were wrong. The prices on many of these assets now probably are ridiculously low. But buying them on heavy leverage is risking, if you're a little wrong, you can die. And that's what happened to Lehman.
The problem is that now everything in our financial markets is super interconnected, and so one failure has the potential to push over other dominoes.
But why AIG and not Lehman?
Because AIG was so enormous, it's a paradox. It's almost perverse. Lehman was not big enough in the derivatives markets, where if you fail, then they might then push over another domino. Lehman was not large enough in those areas. AIG was enormous. AIG had those derivatives for European banks, which may have failed. And so you see, it's a worldwide problem.
To let AIG go under now would have created an awful lot of problems for an awful lot of other institutions. And the government doesn't have any way to know exactly who and how much, and they were scared. And they probably were right to be scared.
Let me ask you about one telling anecdote, at least telling to me. The Secretary of the Treasury, Paulson, calls the CEO of AIG and says, "You've got to go. Pack your bags and leave." That's usually a decision for a board of directors.
Well, you see, the problem is the government owns it now. With the $85 billion loan, they have taken over 80% of the company.
It's been nationalized.
Okay. It's been nationalized. So Paulson is the new chairman of the board. And he's saying, you're gone, you're gone.
You called this on your blog yesterday, 21st century socialism.
That's right.
How so?
The government is nationalizing companies. They nationalized Fannie Mae and Freddie Mac, and that made a little bit of sense since we'd always thought Fannie Mae and Freddie Mac had an implicit government guarantee, whatever that meant. And now they've nationalized AIG. They own 80% of the company. They have lent money to the company at very strict terms. For this company to somehow pay that loan back will require amazing competence in managing things, and I don't think anybody expects them to ever do that. They're probably going to liquidate AIG. It amazes me, I'm not sure it was unnecessary, as I said, but I can only envision what the right wing would be saying if a liberal Democrat had decided to nationalize the biggest insurance company in America. I don't think you'd be hearing a lot of praise for it.
The ugly thing about this is privatizing gains and socializing losses. So when things are going well, the managements make out, the shareholders make out, the counterparties are fine, all the private sector people do well. But when something goes wrong, when decisions are made that turn out to be bad decisions, the U.S. taxpayer has to take on the problem. And there's something very wrong about that. Because all of those people that made all that money are running off here into the distance with the money, carrying it in their bags, and the United States taxpayer is on the hook.
There's another aspect of that, which is the biggest risks were taken in the derivatives markets and in the markets of what I call the shadow financial system. This is a completely unregulated financial system that grew up aside our fairly heavily regulated financial system. And the government decided it would not pay any attention to it. There was no need for regulation. Alan Greenspan was very adamant on that. He believed that the derivatives they were trading would shift the risk away from the banks he was supervising and to institutions that could better withstand it. But he had no facts to prove that, and it turns out a lot of it ended up at the banks, which is why the banks are in trouble, and a lot of it ended up other places. And the ability to shift the risk meant that more risk was taken.
Here's what I don't understand about AIG. You know, you say it's been nationalized, and the company agreed to be nationalized, in effect.